Hello and welcome to Starting a Business, What's First? My name is Grace and I'll be taking you through this workshop. So this is just the recorded version. We do run this once or twice a month in our office in person with small groups as well. And we run different noon hour workshops once or twice a week. There's 5 different ones currently in rotation, and so if after this kind of introductory level workshop you're wanting to learn more about something specific, you can go onto our website under news and events, or you can go to the Community Futures Grand Prairie and Region Eventbrite page and see what else is being offered. So let me go to the next slide, hang on. So just an overview of what Community Futures is. So we're a nonprofit whose mission is to help rural communities develop and implement local solutions to challenges and opportunities in the area of economic stability, growth, and job creation, diversified and competitive local rural economies, and creating economically sustainable communities. And so for every Community Futures office, this looks a little bit different. For the Grand Prairie and Region 1, this is mainly one-on-one business coaching, workshops like this, flexible business loans, and specialized programs such as Smart Start, Show Livewire, and Lemonade Day. So just today's agenda. The purpose of this workshop, we don't really go too much into detail on anything. It's just kind of to give you an overview of what are all the things that you need to be thinking about and all the things that you need to consider before starting your business. And then you can go home after this workshop and start doing your own research. And then once you've done some of that, you can come back to Community Futures and work one-on-one with a business advisor to get your business plan in place. So we're going to talk about the 3 basic ways to organize a business. We're going to talk about registration, trademarks, licensing, branding, employment standards and other HR considerations, business insurance, where to get the money to start your business, so financing, some key professional relationships that you want to think about developing, and then we'll briefly touch on making a business plan. So there are 3 ways that a business can be structured. There's the sole proprietor, or a sole prop as it's commonly called, the partnership, or the corporation. So the sole proprietor, basically you are the business and the business is you, you're running it yourself. Any money that you make from the business is taxed as your personal income. Anything you buy for the business, you personally own. The business is not a separate entity. This is the simplest business structure and the easiest one to get started with, but it does have the downsides of having unlimited liability and limited life. So what this means, unlimited liability means that your liabilities are not limited to the business. So if you take out a loan or you owe any creditors any type of way, you have any kind of liabilities for your business, creditors do not have to stop at taking the assets that you use for your business or the money that you have in your business account. They can come after you personally, and all of your assets and all of your money is liable to be taken to pay those debts. And the limited life means that this business does not continue existing after you stop operating it, or if something would happen to you and you pass away, the business dies with you. You can't sell this business, you can't will it to someone. It is just a thing that you operate. Next, we have the partnership, which is fairly similar to the sole proprietor. It has that limited life, the unlimited liability. It's taxed as personal income for all of the partners. The main difference is that it's 2 or more people, and you have a partnership agreement which dictates how profits and losses are allocated. If you do not have a partnership agreement in place, regardless of whether you intended to start as a partnership, if you are in business with 2 or more people, legally, according to the Partnerships Act, which is the legislation that governs them, you are considered a partnership. And if you don't have a partnership agreement in place that specifies how profits and losses are to be split, or if any of the partners are to get some kind of salary, then it's going to default to everyone just getting an equal share of the profits or the losses, regardless of how much work you've put in, regardless of the size of your initial investment. And within the partnership, there's 2 types of partners. So you can have a general partner, which you must have at least one of, and this is the partner with the unlimited liability, And typically, because they have unlimited liability and are taking personal risk for this business, they are the one who is most actively involved in running the business. They are the day-to-day management. You can all be general partners, you can have multiple general partners, but you have to have at least one. And then the limited partners, these people are actually, they do have limited liability to the assets and money that they have in the business. But with less risk, there's usually less reward. These people are typically not going to get a salary like the general partner would, and they're also typically going to be given a smaller share, a smaller percentage of profits compared to a general partner. And they are typically not actively involved in running the business, and that is why they might want to be a limited partner, because they aren't getting to make those day-to-day decisions. So because they have less control over what happens with the business, they want to minimize their risk. And then finally, we have the corporation. So a corporation is actually a separate legal entity. It is its own thing, completely separate from the owners, and it is taxed at the corporate tax rate. And then if you are incorporated, you'll pay yourself either through a salary or through dividends from your shares in the business, and those are taxed personally, as either the salary is taxed as income or the dividends you pay dividend tax. The corporation is accountable to its shareholders. So it might be just you who holds shares. It might be you and a few other people. You might be publicly traded and have tons and tons of shareholders. There's lots of different ways to set that up. When we say privately versus publicly held means you hold most of the shares and you can choose to give them or sell them to specific people. Publicly traded means that anybody can buy and sell shares in your company on the stock market. You might choose to pay dividends. If you're incorporated, you must have an annual shareholder meeting. Even if you are the only shareholder, in that case, you'll have what's called a meeting by resolution, and basically you'll go to the registry office, you'll get the paperwork, you'll write down all the shareholders who were present at the meeting. So if it's just you, it's just you. If it's multiple, it's multiple. And then any resolutions that you have passed for the business for the upcoming fiscal year. And then you'll file that, and that will go with your minute book. Corporations, while they're more complicated to set up and have a little bit of extra work that goes into running them, do have the benefits of limited liability. Like I said, the corporation is a separate entity from you. So the corporation can take on its own liabilities separate from you as the owner. And then therefore, when it comes time for creditors to collect, only the money and assets the business owns can be taken. And it also has unlimited life. So regardless of whether you pass away tomorrow, regardless of whether you sell everything you own in the business and don't want anything to do with it anymore, it still exists. So you can leave your shares in a company to your children, you can sell your shares in the company. It doesn't just stop existing when you stop operating it the way that a partnership or sole proprietorship does. So now we're going to talk about registering your business name. So no matter how you choose to structure your business, you'll want to register a name that you'll be operating under. So here's some of the basic steps. You can find a lot more information on the Government of Alberta website, and a lawyer can also help you with this if you want. So you choose the name, you'll complete a business name search, make sure nobody has a similar one. Fill out the forms that are on the government website, and then you take those to a corporate registry service provider. The term corporate registry service provider sometimes throws people off. Regardless of whether you're incorporated or not, that is still the place you go to register the name, regardless of your structure. It's just also the place that you go where if you are incorporated, that's where you're going to take your incorporation papers and apply for that. So registering a name allows you to use it, but it doesn't guarantee exclusive use. So if you want to trademark your name or logo, which would give you exclusive use of your name or logo, that's a separate process. And for this, you will need a lawyer, specifically a lawyer who specializes in trademarks and copyright. Unfortunately, there are none in Grande Prairie, but you can work with a lawyer out of Edmonton or Calgary. There's even some lawyers in Toronto that will work with you remotely. But it is recommended that you get a lawyer for this process because it is quite complicated and it can take up to 3 years. So for licensing and permits, This first one here, this business license, every single business needs to have a business license. You cannot be operating and making money without a business license. If you are, that's illegal. Fix that right away. So you purchase this from the city or the county that you are operating in. For the city of Grand Prairie, a commercial license is $0. You just have to fill out the paperwork so that they know you exist. And a home-based license is $200. It has to be renewed annually. If you're late renewing it, they're not going to take it away, but you do have to pay a $50 late fee. And then some other common industries that require additional permits include agriculture, anything where you're handling food, and trades. So if I'm opening a restaurant and I'm going to be handling food, or my staff are going to be handling food, everyone needs to have their permits. For trades, I can't just go and decide that I'm an electrician because my dad taught me how to do it and start selling my services. I have to actually be certified. I have to actually have gone to school. I have to have done an apprenticeship. I have to have the proper permits. Now we're going to talk a bit about building your brand. So it's important to have a strong, distinct, recognizable brand so that people remember you and people can identify you easily. So the first step is coming up with your name and logo. You want them to be unique. You'll want multiple versions of your logo. So maybe you have a black and white one and then a full color one. Maybe you have like the full logo that has an image and the name of your business and everything on it. And then maybe you have one that's just the image. And then you should probably also have a letterhead, which is just the name of your business in your brand fonts and your brand colors. Your brand identity is all of those visual aspects that come together to form your brand. So what are the colors that you use? You'll typically want to pick 2 or 3 main colors, and you can have shades of those colors, but you don't want to go crazy with it. You'll pick your 3 or 4 main fonts that are acceptable within your branding. The versions of the icons that you're using. So if on your website you have links to Instagram, Facebook, Twitter, whatever else, you want to make sure that the versions of the logos you're using there are the same versions of the logo that you'll use on any other promotional materials. You want it to be consistent. What is the tone that you talk to your audience with? Are you like super chill and laid back? Are you funny? Do you have GIFs in the blogs that you post on your website? Or are you like very buttoned up and structured and corporate and formal? Decide what tone you want to have when you're communicating with the public through your marketing, and then stick to it. You'll probably also want to come up with guidelines around how the logo can be used. So some examples of common ones are you don't stretch it, you don't compress it. It always has to be displayed upright on promotional materials. It can't be like on its side or upside down or twisted. You don't want it on top of any crazy colored backgrounds. It needs to be on top of a solid background. You might say that it needs to have a certain amount of clearance from the edges of a page, things like that. And all of these go together in your brand guidelines document. And then you need to make a complete marketing plan. So what are your goals? Who are you hoping to reach? How much are you hoping to grow your business? Why are you marketing? You'll need to complete market research. So what is the best way to reach the people you're trying to market to? Do people in the places that you're marketing even want your product or want your service? A competitive analysis, so your business should be solving a problem for consumers. How else can they get that problem solved? That might be as simple as, are there other companies doing the same thing as you? And that might also just be, what are alternatives to hiring someone like you? Can they do it themselves? Is there a completely different way to do it? You need to explore all of those options. You need to write out what your competitors are good at, what they're bad at, why you are the option that your customers will choose. And speaking of customers, you need your target market. So a lot of people struggle to come up with the target market at first because you think, well, everyone's my customer. Anyone can buy my product. Anyone can use my service. And while that's technically true, that does not make for effective marketing. So I like to think of the target market as literally like a bullseye target. So that very outer ring, that's everyone who can feasibly technically use your service or benefit from your product, whether they know it or not, they could buy what you're selling. And then as we get farther and farther in through each ring, we get more and more specific. We're breaking people down by geographics. Where do they live? Demographics. What's their age, gender, race? Are they married, single? Do they have kids? Behavioral things. What's their lifestyle like? How much money do they make? Where do they work? What hobbies do they have? What do they value? And then by the time we get to that very, very center circle of the bullseye ring, that is our specific target market. It is an ideal customer who we know is going to benefit from your product or service and is most likely to purchase it. And then that person, it should be so exact that you can describe an individual and give them a name, okay? That's called a customer avatar. And once we have that a target market so specific that we can create a customer avatar, all of our marketing should be going towards this customer avatar. And as your business grows and you might have multiple streams of service, multiple lines of product, you can have multiple target markets for each of those lines. But when you're starting, come up with one main target market that encompasses your entire business. Then we need to talk about marketing channels. So this is how are you getting the information about your business to your target market. And it will matter who your target market is, not only to decide the content of your marketing, but also the channels through which you distribute it. So if my target market is retirees living in Grand Prairie, I'm going to put things in newspapers, I'm going to put things in the radio, I might do some billboards, I might put up posters at places like the public library. If my target market is teenagers, I'm on Instagram and I'm on TikTok. Depending on the nature of my business, like maybe if I'm a nonprofit working with youth, I can go into the schools and connect with them, things like that. And then what is the budget for your marketing? A typical marketing budget is anywhere from 10 to 25% of your total revenues. And before you started the business, you don't know exactly what your revenues are, but you'll need to create what's called a cash flow projection. And this is just one use of it, is for creating that marketing budget. You'll be able to project what your revenues will be and base your marketing budget off of that. But the cash flow projection is really, really useful for a lot of other things. It allows you to see if your business is even feasible. It allows you to know if you need to get a loan or any kind of external funding. It allows you to know when you can hire new staff. It allows you to know when you can make major purchases. And it's also required if you are wanting to get a loan. So that is another workshop that we run, and we can help you write one of those if that's something you're interested in. But yeah, the marketing budget, 10 to 25% of revenues. So let's talk employment standards. Now, when you're first starting your business, you might not necessarily be hiring any staff right away. But in your business plan, you'll still need to explain why you're not hiring staff right away, how you are going to handle everything that needs to be done, and when you are going to hire staff. And when you go about hiring staff, these are some of the standards you need to be aware of. What is the minimum vacation time? And then what is the expected amount of vacation time for the level of position that you're hiring? If you're hiring someone with a lot of education and a ton of experience in their background, they're going to expect more than the minimum amount of vacation, the minimum amount of sick days, and the minimum amount of time off, right? What are the minimum hours we can give someone? You can't schedule someone for a shift less than 3 hours. If you do, you still have to pay them for 3 hours. And then what are the maximum hours that we can have someone work? What are the requirements around overtime? What is considered job protected leave? What are the minimum amount of breaks you can give someone? How much time off do you have to allow them? And then what is the appropriate pay for the position? So we all know that minimum wage is $15 an hour, but considering the requirements for the position that you're hiring for, as well as the responsibilities of that role, what is an appropriate starting pay? And most industries are regulated by the provincial government. The only time you're really going to get into federal regulations is if you're working directly with the federal government, you're in radio, broadcasting type things, or if you're in transportation. And then payroll deductions. Make sure you understand how to calculate and take off the correct amount of EI, CPP, and income tax, and how do you remit to the Receiver General. So that is the term for sending all of those withheld deductions to the CRA. And this is something that you can do yourself. This is also something that you can just hire a bookkeeper to do. You can hire a bookkeeper to do your payroll. And if that is the case, you need to include in your business plan either proof that you know how to do it, or which bookkeeper you're hiring to do it. So business insurance. The two main ones that I want to emphasize today are commercial general liability, or CGL, which protects against lawsuits involving bodily injury or property damage. It does not cover your own assets, damage caused by faulty workmanship, or your employees being injured. But if you accidentally damage your client's property, if a passerby is injured walking through your work site, or people who aren't your employee are injured due to your work, this commercial general liability can protect you from the lawsuits. And then we have commercial property insurance, which protects the physical assets that you own as the business or that the business owns. Some other things to consider depending on what exactly your business is business interruption. So if something happens that prevents you from operating your business for an extended amount of time, you might be able to recoup some of the losses. Cyber liability, crime insurance, tool floaters, and contractors' equipment. So that commercial property insurance only covers property that is in a fixed location. If you are traveling to different sites, if you have tools in your truck that you take to clients, you need tool floaters insurance to cover the things that you're traveling with. You might want pollution or environmental liability, depending on what you're doing. Errors and omissions and professional liability. So if you're teaching or giving people any kind of advice, you'll want that. And then directors and officers liability. So we talked about how corporations have that limited liability, where it's limited to what is in the business. Sometimes your directors and officers can do something personally, but it appears that they're doing it on behalf of the company. And in that case, they're presenting themselves as an agent of your company. So your company could be sued for the director's actions or the officer's actions. So you'll want insurance that protects you from being sued over that. I mean, you'll still get sued, but then the insurance can pay rather than your company having to pay. Another thing to consider with the property side of things is if you are renting the space that you're running your business out of. Like if you're running a home-based business and you're renting, you'll need to update your tenant's insurance and tell them that you're operating a business. And you'll also need to confirm with your landlord that you're allowed to operate a business out of the space. Okay, so for financing your business, it's recommended that you have enough capital before you start going to cover your startup costs plus the first 2 years of operating costs. And so how do we figure out the startup costs and 2 years worth of operating costs? With that cash flow projection that I talked about. And then where do we get the money for all of that? It can come from your personal savings, from business loans from the banks. If for any reason you're denied by the bank, you can go to an alternative lender like Community Futures. We can do business loans up to $100,000. Equity funding, this is when you sell shares in your business in exchange for money to start. And then for some of those day-to-day operating expenses, you can get a business line of credit. So professional relationships to consider. These are just people that you want to build a connection with, somebody that you want to have their phone number and build that rapport with them. Your accountant, your lawyer, you'll probably want a lawyer at least on retainer. So you pay them a certain amount of money up front, and then anytime you have questions, need to review some paperwork, whatever, you can just go in, they'll take the money out of that retainer that you've already paid them, and then when it hits zero, they'll let you know, and you can choose how much more money you want to put into that retainer just to have them available when you need. Your banker, so if you're getting a loan from the bank, or even just the person who manages your business account and your business line of credit, like develop a relationship with your bank. Your insurance agent is so much easier to work with if you develop that personal relationship with them. We talked about the bookkeeper. If you have a business advisor, so if you're working with someone like Community Futures, make sure that you know who your advisor is, make sure you're maintaining that relationship. You also might want to find some mentors, so people who've been in the industry that you're going into for a while, who have run similar businesses. They can just be there to offer some guidance and support. And then you might want consultants in marketing and HR. So even if you're planning to do your own marketing, it can be good to hire someone to help you create the marketing plan and to kind of do like an every 6 months or once a year check-in with, and allow them, the professional, to give you some guidance on where to go with it. If not completely hiring out your marketing to a professional company. And then the same thing with the HR consultant. You don't need to hire in-house HR as a small business. There are 2 HR consulting companies in Grande Prairie that I know of. There might be more. And this is someone that you can basically have help you hire people. They can help you with any employee complaints. They can help you figure out how much you should be paying your employees. They can help you navigate benefits, answer all of your HR questions, basically. And then the business plan. So Community Futures can help you write this. Make sure you've written your plan, have it all figured out on paper before you make any commitments. This gives you a guide as you go into the future. It also gives you something to look back on, see what you had planned, see what actually worked and what didn't. And because a business plan has very specific categories that you need to write each section on, it really forces you to actually have considered everything that needs to be considered and thought everything through. Because even if there's a category that doesn't apply to your business, in the business plan, you need to articulate why it doesn't apply to you and what you're doing instead. So it's really, really important to write this before you make any major commitments. So that being said, here are the main things that go into your business plan. There can be more, but these are the main things. So your value proposition, that's the very core of your business. What is the problem that consumers have that you are solving, and how are you solving it? How are you making their lives better? If you don't have this, then you need to go right back to square one and figure out your value proposition. Why is your product or service valuable? Your key activities, key resources, those financial projections, again, the cash flows that I talked about, the competitive analysis, contingency plans. If plan A in the business plan doesn't work out, what are you doing instead? What is the backup plan? Your HR considerations, the startup costs, the marketing plan, a timeline and milestones. This is really helpful for yourself. This is also really helpful for potential investors to see, is the business that I've invested in growing at the rate that I was originally told it would? And for yourself, am I measuring up to my original plans? If not, what do I need to change? Do I need to adjust the timeline because it wasn't realistic? Or do I need to adjust what I'm doing because I'm not living up to my own standards? The feasibility study and market research. Is your business financially feasible? Do people even actually want what you have? It might be a brilliant product or service, but if there isn't actual demand for it, you don't want to sink all of your time and money into starting this. Who are your key partners? What are your customer segments? Channels. So this is talking about marketing channels and distribution channels. How are you getting the product or service to people? So if it's a cleaning service, your channels might be your website, where people can find information about you, your phone, where people can call you to book the cleaning service, and then in person, you're going to their homes to clean. If you're selling a product online, your online storefront is your main distribution channel. If you have a physical retail store, that's a distribution channel. You'll also want to put down all of your revenue streams. So what are all the services you're offering or all of the products you're offering? What is the cost structure? So what are the cost of goods sold? So what are you paying to get the supplies you need or to get the inventory you need? And then how are you basing the price of those products or services off of that and off of your time and off of your employees, all of that. And then customer relationships. What kind of relationships do you want to form? How will you form them? How will you maintain them? It is so much more expensive to keep finding more and more new customers and new clients than it is to just keep those good clients and good customers. So you really want to think about how are you maintaining that relationship and keeping them happy and keeping them coming back. So yeah, you're probably feeling a little overwhelmed right now. That was kind of a crash course in everything. We do have some other workshops that get a little more in depth into the details of some of the more difficult aspects of it, namely the business plan and then the financials. We also offer individual business coaching where we can work with you one-on-one, very specific to your business, and answer your questions about really anything to do with it. With this recording, you should also receive just like a digital copy of the PowerPoint, and you should receive a digital resource list that has links to help you research everything I just talked about. If you didn't receive it, just give us a call, give us an email, and we can send that to you. Thank you.